What's up, traders? Sandro O'Connell with Pristine Capital coming at you with yet another market recap video. It is November 18th, 2021. Please go ahead and click the like button on this video and subscribe to my channel if you're enjoying this content. Today we are going to talk about the wild action in the indices. Today was one of the most challenging days in the market for me of the entire year for a bunch of different reasons. We're going to go into all of those. So let's dive right in. Before we do that, quick first disclaimer: nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan and your own risk parameters. And last but certainly not least, do not YOLO your entire account into any one of my trades or anyone's trades for that matter. All right, let's dive into the video, team. So box scores. We have the S&P 500 as measured by the SPY, finishing up 0.34%. We have the NASDAQ QQQ also finishing up 1.04%. So on the headline level, hey, that's not a bad day at all. The indices are going up. But we did have the Russell 2000 down 0.42%, and we had the Dow Jones down 0.14%. Volatility was up in 3 out of 4 of these indices, so that's a yellow to red flag. And then we also just had horrible breadth in all of these indices. Again, this is the second day. So best breadth was in the NASDAQ with 50% advancers. And we had the worst breadth actually in the SPY. Only 33% advancers, but the index was up. So on a day like this, the market sold off. But you just can't see that, if you're looking at the SPY or the QQQ. So that's what makes it a bit of a challenging day. I was long individual names, individual sectors, and hedging myself for some downside with index options. And that was one of the reasons why today was a very challenging day for me. It's not the first time this has happened, but yeah, it's a challenging day if your hedges are going up and then your longs are selling off. So yeah, today, very interesting day. Let's go over to our heat map and we can see exactly what happened. So take a look at this. We had Amazon very strong, up 4.14%. We had Nvidia after reporting earnings of 8.25%. But I will note, Nvidia is just trading back to where it was maybe like a week ago. So it's not like, oh my gosh, Nvidia, crazy power earnings gap setup. It's really just, back to the prior highs. Apple was up 2.85%. I actually took a small position in Apple into the close. But other than that, you can see that everything was pretty much selling off. And if we were to look at a heat map of the small caps, this would be even worse. Just a lot of names really selling off. Let's take a look at some of those. So for instance, like Nvidia, up 8.25%, but Nvidia sold off today. Still, great price action overall. This is an awesome trend. Yeah, even, the best of the best up 8.25%. It's not really like this was like a glorious day of action. I would say the glorious day of action was in Amazon. And we talked about this name on our pre-market webinar. And Goldman Sachs had named this their top pick for 2022. Goldman Sachs, one of the biggest investment banks. I'm sure they have a ton of clients that are hanging on their every word. And Amazon caught a lot of flows today, up 4.14%. You can see moving on nice volume. Apple, same deal, really nice price action today, up 2.85% and out to a brand new high. Let's take a look at the weekly for Apple. Yeah, weekly looks very solid. So basically we're having, investors moving out of a lot of these different areas of the market, and they are moving into, these mega cap tech names. One thing I will note is the inflation narrative has been really picking up. Like, oh my gosh, this inflation is crazy. Are we going to have to hike rates faster? What's going to happen? We've had treasury yields flirting with a breakout to the upside. So I want to say bias, fundamental bias from reading is that, hey, these NASDAQ stocks could really come under pressure. Because the NASDAQ stocks are the closest to treasuries in the equity market. Typically when yields break out, the NASDAQ is very weak. But that's basically what journalists are saying. Hey, inflation is so high, it's going to be a big concern. As of right now, market participants they're allocating into these bond-like equities. So I think that's another reason why for me I was kind of a little bit thrown off and positioned a little bit backward heading into today, to be honest. S&P 500, let's take a look at this. So we are having essentially a consolidation in time. So when I look at this index, from a pure technical perspective, this looks like a very bullish chart. The S&P 500, it was very overbought. And over here, I was like, oh my gosh, this market's overheated. We ended up having a little pullback. And we've really just grinded sideways to higher ever since. Now we're not super extended away from that 20-day moving average anymore. But I think if we were to hit it, people would, completely panic. But I mean, yeah, we're consolidating. We're working our way right up to the highs. Into OPEX, we're pretty much pinning at this 4,700 level. But if I'm looking at this from a pure technical perspective, I'm expecting more upside here. Let's take a look at our NASDAQ. NASDAQ just broke out to a new all-time high today. So this is like, if you're just looking at these charts, hey, I want to be long this. The Russell 2000, is pretty weak. And the Russell 2000 just pulled back to the 20-day moving average. So it's going to be important to see, can the Russell get, above this 20-day? I have seen instances in the past where the mega cap tech stocks, like literally like 4 or 5 names, they will drag the index higher. If those stocks enter uptrends and they really come in play, it almost does not matter what the rest of the index does. The index is going to move up. That's happened before. Could it happen into year end? Certainly could. But it's very tough to hang your hat on just 4 names when the rest of the market's really struggling. And then we have the Dow Jones also trading now under that 20-day moving average. So we're seeing breakdowns in the small caps in the Dow Jones, and then we're seeing essentially melt-ups in the S&P 500 and the NASDAQ. Let's take a look. We'll go to our sectors and style factors. We'll look deeper under the hood. And we had semiconductors up 1.67% today. Retail also outperforming up 1.87%. Consumer discretionary. So these parts of the market, that's pretty risk on, seeing retail and consumer discretionary moving to the upside. Of course, we have this XLK really gaining momentum of 1%. But then when you look at pretty much everything else, blockchain assets were down. That's another thing. Crypto is really correcting here. So we'll look at the crypto stocks in 1 minute. We had ARKG, KWeb. I was also long China stocks heading into today as well. And then what do we have here? Yeah, just, broad selling across the other spectrum of assets. Let's take a look at our crypto. And crypto, in the after hours, it's not getting any better for crypto. So in terms of, risk off or risk on sentiment, using the crypto market is typically a pretty good gauge. In the last risk on move, Bitcoin bottomed before the headline indices like the S&P 500 and the NASDAQ. Now we're seeing the opposite, where Bitcoin's pretty much plummeting. Like now we're below this 50-day simple moving average. We're breaking through support levels. So it's odd to see some of these other risk-on groups just sort of plummeting to the downside. Then we have, small caps plummeting to the downside. We have the S&P 500 and the NASDAQ hanging on by what seems like a thread, and the volatility's rising in those indices. So let's take a look at the vol. We have the VVIX closed up 0.56% today. And then we have our VIX closed up 2.81% today. So could this just be like some OPEX, weirdness? Certainly could, but this, I would say, this market environment is super ambiguous to me. And for that reason, for me, I just don't want to go too crazy with trading. I feel like my edge is just not really there at the moment. Another little wild card, just something to think about, is the seasonality. Into the end of November, a lot of times there is a dip. It's kind of covered by this line I drew, but you can see, you go from all the way up here to about down here. And then at the end of the year, look at how much the seasonality improves. So what I'm sort of thinking here is like, I was ready for, hey, maybe the S&P 500 and the NASDAQ, you can see this S&P 500 seasonality right here. Maybe there's going to be a pullback, in line with the seasonality before we move higher. What it's starting to look like it could be is, maybe we are getting the pullback, but the pullback just isn't happening at the index level. Because, we can see we're getting a consolidation in time, or a correction in time, not a correction in price. So I'm starting to open my mind up to that a little bit more. Hey, maybe, we just start moving to the upside, led by the FANG names into year end. It seems like this seasonality is like the most dominant thing out there. It's like, doesn't matter what's going on in the economy, what's going on with inflation. It's just like seasonality, bro. So if that's what's going on, I'll take it, I'll ride it. I do not want to be out of line with the seasonality. My seasonality rating I had on neutral for the better part of November once we got out of the beginning. And the market is following the seasonality, really just chopping sideways. But now it really improves. That's another thing we have to take into account. Another just like mixed signal here is the Squeeze Metrics DIX. So this declined again today down to a 41.4% reading. And this is showing that dark pool buyers, they're pulling away from the market. When you get a reading above a 45, that's very bullish. And as you move further away from that, not really as enthusiastic about the market. So, the headline indices are up. The breadth was horrible. The volatility was up. The DIX is coming off, but then the seasonality is improving. So, this is a really, and then we have crypto selling off, and really ambiguous setup here. Now let's take a look at our style factors. We had growth up 0.78%. We had quality up 0.12%. We had international momentum positive, but our biggest losers, we had high div, low vol selling off 0.69%. It was our biggest loser. That's interesting. And then we had value selling off 0.43%. So even with these style factors, like, it's kind of like random. There's not really, to me, this just says, hey, FANG stocks are moving up, like with the quality and growth. Very, very ambiguous. Let's take a look. We'll go through some of my trades for today. Today was, for me, a lot of just, taking stops. Today was not my best trading day. Let's check it out. So this was early in the morning. I was like, oh man, a couple of my longs are really getting sparked. Market's moving to the downside. Let me put on basically like a lotto put position. And I ended up putting this one on, and the market literally just like reversed off the bottom. So this was, I added November 19th, 467.5 puts. Let's take a look here. And the market really just in like the first hour was like, oh, here it comes. And we spilled into this weekly value area, but then we just ripped right out of it. So I ended up stopping out of those for a loss. And it was, it definitely was a little bit frustrating because, it's like the individual names I'm in, they're getting hurt, but the hedges that I'm putting on are not really working. So I think it's just important, for me, I'm always, what can I learn every time I make a mistake? And, for future reference, like when you see Apple, Amazon, those big stocks just like showing relative strength, then using SPY or using the Qs as a hedge really is not going to work. So when you see Apple like showing the relative strength, you see Amazon doing its thing, like you're better off. It's almost like you're buying, when you buy a put on the SPY or you buy a put on the NASDAQ, it's like you're buying a put on the FANG stocks. So that, didn't work for me today. So once I saw that happen, I was like, all right, let me just not do all that much. Let me take down exposure, if anything. So I ended up closing those out for a loser. Small trade though. I also had some Qs puts that I came into the session with. Closed these out for a small loser as well. And it was really just, hey, like we're seeing these stocks outperforming. This index hedge is not going to help me, even though the market is weak. Then I added to my Bitfarms December 17th 7.5 by 10 call spreads. This is my biggest position now for 68 cents. And I was taking advantage of this weakness in Bitfarms. So I stopped out of a couple positions and basically rolled the proceeds into Bitfarms. I like this technical pattern, still intact. Basically the strongest crypto miner, but of course, we're just not getting a reprieve after hours for Bitcoin. So again, this could be a really challenging environment if it's like all these risk on assets are, moving to the downside, but the headline indices just keep chugging along. So I'll have to find like a different way of hedging, or even just reducing exposure. I have no issues with that. Yeah, we're seeing continued weakness in the after hours here. So it's really like, do the headline indices catch down to everything else? Or does everything else catch up to the headline indices? We'll have to see. Like, for instance, the IWM, I imagine there's a lot of traders today that had, issues in the market. So I don't think I'm the only one out here. But like, say if you go, all right, now I'm going to stop out of all these stupid small caps, all this other stuff. I'm going to stick with the headline indices. The Russell pretty much just pulled back to the 20-day. So who knows, could this be like the destination for this pullback? And then we just inflect higher into year end for a Santa Claus rally. That's another, little bit of ambiguity where, we just see all these markets doing something a little bit different. Let's check out, in terms of some stock trades. And then one thing I wanted to do was, hey, I feel like my portfolio is not really aligned with the current price action. I think this trend in Apple and Microsoft, I could have done a better job sort of like identifying that ahead of time. But given now it's a little more obvious, hey, these stocks are leading, I just wanted to get some position on in them. Just to at least participate, in case they move to the upside, I have something on. So I took the Apple 155 strike, January 21st calls for 860. I made sure to size it small. Because again, like this environment feels weird to me. Came into today sort of like flip-flop the wrong way. So I want to make sure I'm not like, okay, now let me go all in on the NASDAQ and then, something bad happens. Stock trades. In the morning, I did take Playboy long. And this one triggered a power earnings gap setup, took it for 41.92. But this, again, I would say this was poor stock selection. And it was really like, setup triggered, but then it failed, and we saw a weak breadth in the Russell compared to the strength in the mega cap tech. So I think instead of putting on a position in Playboy, I really should have been putting on a position in maybe like Apple or Amazon. Amazon was a name that I talked about on the pre-market webinar, saying to watch for it. But I think the fact that I came into the session with some Qs puts already kind of messed me up in a way where it's like, well, I'm short those. I can't get long Amazon. They'll be conflicting. So I think that's something for the future. Just, hey, make sure to stick with the relative strength. Don't try to go with something a little bit different when there's a more obvious trade out there. And then what else? Stopped out of my GTBIF. The cannabis names, again, this was a theme that looked pretty good at the moment. Hit my stop, so I just took it off. Toast as well, another name that I just had to take a stop on. This one, Toast. Yeah, it was in a little consolidation pattern, and this one just broke to the downside. So yeah, pretty much all of like the individual, more like niche names, especially small caps, they just gave way to the selling today. It was really just that small group of stocks that was, really rock solid. Let's take a quick look at our options order flow before we wrap. And that's really just part of trading. You're going to have your awesome days where everything feels euphoric. And then you're going to have those days where in your trading business, you're like, oh man, nothing went right in my trading business. That's just par for the course. Really, like in any endeavor, you're going to have those days. It's really just about how you react to it. And in the trading business, how you manage your risk. For me, it's like today wasn't really the best day, but I know, okay, my risk is managed. Nothing is sized too big, like that sort of stuff. So for me, it's like, all right, Now, next play. Whatever, moving forward, let's just, go back to winning ways. You can't really, like, say if you also had, a not so good day in the market today, you don't want to be like, oh, woe is me, like, it's all over. Like, I'll never make money in the market again. Like, that's just not true. Like, to me, sometimes, to be honest, I find it kind of comical. Like, when I have a day like this, I'm like, wow, my shorts went up and my longs went down. It's really just like a very random thing. It can certainly happen. So when I see that, I'm like, wow, that was, like very low odds. It happened. And then you just move on. And let's take a look. So not really much in the way of Tesla premium today. So only 3 billion in premium. Had a bunch of Nvidia premium. Roblox was going crazy. Roblox was like my saving grace. This one, like, and for me, like, I talk about more so this stuff like, I need to work on this, this I could do better, or that's just my mindset. But like, I don't really focus as much on like what's working really well for me. Like, I have a bunch of things that are doing awesome, but those, like, I don't need to focus on those as much. Roblox is one that worked out very well. But let's take a look at what we're seeing. I see some UPS, some Roblox, even Rivian. So let's check those out. Let's look at our tradescape. So Nvidia, of course, a bunch of calls coming in. These are November 19th calls. Let's check out Apple. Apple, I took my position in. And we see the November calls coming in for Apple. Some Decembers. Yeah, these are all super short term as well. I see some December. January 2022 at the 150. So yeah, we'll see what happens with Apple. Alibaba. This one reported earnings, and it really just whiffed its earnings report. To be honest, like, I thought, hey, like, a whiff is pretty much priced in. Yeah, Alibaba got sparked. It's trading almost down to the lows from before. Notice it did not make a new low. Same thing with KWeb. I have some calls going out to June in KWeb. KWeb, did this one get sparked today? Absolutely. But for me, my calls are going out to June. So I could really be like, oh my gosh, this is horrible. But in 2 weeks from now, or like 3 weeks from now, or 2 months from now, KWeb could be so much higher than where it is today. So for a position like that, where you're really deep out in time, you just have to be like, what's my time horizon for my trade? What's my stop out point, etc. Right now for KWeb, we're holding on to this bottom of value. So yeah, I'm curious to see if KWeb actually makes another higher low in this trend. So we'll see. We still have the potential to do that. One name that's looking pretty solid with these China names. So Alibaba just whiffed. And I think Alibaba, that's what most investors are in. So they're going to have to find new China leadership. This company NetEase looks like it could just be that stock. NetEase was only down 0.04% today. Just look at the chart on this thing. It looks awesome. So yeah, this one looks very strong out of those China names. Let's take a look at some other flow we're seeing. We saw the Alibaba. Okay, right over here. We had some Facebook, primarily calls going up. So more, FANG stocks. Amazon. Options going up to December, November. Yeah, mostly December and November. I think too, like, there's probably a lot of money managers that they're just like, seasonality's good, I don't know what to do, like, buy FANG stocks. Like, pretty much when in doubt, like, FANG stocks are like the safe bet. Microsoft seeing a mix here. NDX. Whoa. Huge call buyer in the NASDAQ. What? 481 million. That's almost a $500 million of premium in one trade. That is insane. So that probably contributed to some of the strength that we saw in the NASDAQ today. So yeah, if I'm positioning some puts and a big call buyer comes in like that, for me, it's like, all right, you got me on that one. I'll stop out and, you take that win. Lucid. Yeah, real quick, let's look at some of these EV stocks. So EV, Lucid, pulling back 10.47%. What's interesting is Lucid is still in this channel. So this one doesn't look nearly as bad as some of the other ones. This is actually one to watch in case the Russell ends up bouncing off this 20-day moving average. But let's take a look at some of the other ones. We have QS. Doesn't look nearly as good. Pretty deep pullback out of the channel. LEV, also not good. Really just lost all of the gains. QuantumScape. Oh yeah, just looked at that one. Rivian. So Rivian, it just goes to show like how crazy this market is right now. Like Rivian was blasting off to highs. Like the stock went from, you know, the close over here at 101, almost doubled. You know, went all the way up to as high as 180. Literally like 2 days ago at 180. Now we're back at 123. So yeah, you know, for these kinds of stocks, like I would love this is another one. I'll certainly be watching it. You know, does it get down to this prior low? Do buyers step in ahead of time? But for these, it helps sometimes if you can just get, you know, some nice basing action. That being said, that about does it for this market recap video. This one is a little bit long, but I really just wanted to describe my thought process. Today was, you know, certainly not a fun day. When you get action like this, it is very important to just make sure you remain composed. For me, at a certain point today, I jumped off the desk. And to be honest, I did take a nap today. Just because, hey, you know, looking at this is not going to really do me any better. You know, just staring at, like, let me just stare at my P&L all day. Like, no, I'm not going to do that. I'm going to make my adjustments and then really just, you know, move ahead, upward and onward. That's what it's all about. You got to have the mental stamina in this game. You got to be willing to, you know, take a couple steps forward. Sometimes you are going to take a step back. Today was definitely a step back for me, but that is okay. We are moving on to tomorrow. Upward and onward, everyone. I hope you all had an awesome trading day. I'll see you all tomorrow.